Good morning and welcome back to another pipeline trading video. Today I just want to go over everything you're hearing in the news. And let's take a deep dive into oil, the S&P, the Nasdaq, Bitcoin, ETH, gold, and just see what the charts are telling us. So right now we had a huge sell-off on oil, which is what to expect with news like that. But one thing I'm not overly optimistic on is we have liquidity. So we know that the smart money, the institutions, are going to come and take out all the liquidity before making its next leg up. So unfortunately, with all of this great news, which I'm happy about, and I hope the war ends and everything comes to a complete halt, the charts aren't telling us that yet. And the reason I say that is I think back in the April tariff situation where every time, again, we're headline driven. So if you look at this chart, I see an order block from this candle. So you're going to see the institutions push the market down. And it's interesting because it's right at about the 50-day moving average. Take out liquidity and then make its next leg up. I still expect oil to go back to in the 120s. That's what I'm seeing. So short term, great. You're going to see this. And if we break the 50 and things continue to progress and peace talks and everything else, then if we break this level of 84.07, then the next target would actually be around $70 a barrel. So that's it for oil. So we have to wait and see. Don't get overly optimistic yet. One little piece of the news could change everything. And then if we go to the S&P and the Nasdaq, I'm seeing the same thing. Now, to be honest, I didn't expect that we were going to get these talks. It was a 50-50. And if you remember one of my older videos, maybe a week or so ago, I said we could bounce up. Typically, I would have thought we're going to bounce to the 200-day before making its next leg down. Now, I still believe we're going down on the Nasdaq, first target of 546. And I did say we were going to get into this order block, but I actually was anticipating a further leg down because when you take this, you're looking at a 12% drawdown. Now, hopefully this is it. And how do we know if this is it? We want to see us break the 50, which is this red line, and hold it as support. Right now, just like I showed you on oil, where the institutions are going to push it down to get liquidity, because think of the size that they're trading. They need the liquidity or else they're going to move the market and everybody's going to know their play. So what's interesting is it's the same thing here on the downside. This order block is where we could see the reversal happen. And again, this is a gap up. Typically, gaps get filled. So it could be a gap that gets filled in a few days or a week or a few weeks. So just know, keep that in the back of your mind. Let's see if everything confirms. Let's see if there's actually peace and Trump's mission is complete. And if that were the case and we hold support above the 50 and the 20 crosses the 50 and the 10 crosses the 20, and we hold the 20 all the way through as support, then you know that we're going to go and make new highs, or at least we're going to go test the 636. Right now, it's way too early. As fast as we've come up, we could come back down. And keep in mind, this is a gap up. So that's one thing I'm always cautious of, because I know that these gaps, typically in an environment like what we're seeing, could reverse quickly. Now, at the same time, I also remember the gap back here in May, but that was after the tariffs and all the things. But you could see over here that once we got above the 50 and we held it as support and the 10 crossed the 20, we went for a ride and it held it ever since. So that's one of the big things. We still didn't hit the shallowest Fibonacci level, which is 0.382. And same on the higher time frame. Sorry, not the higher time frame, on the S&P. It's the same story. The S&P looks like it can actually go higher, and we could see a potential 691 area. But again, we're going to find out because we have to stay above this 50. So before you come to any conclusion on this is a reversal, the market's going, we're going to make new highs, everything's great, pump the brakes. Sit like a hunter, wait for the confirmation. Now, if we go to Bitcoin, Same thing. You're seeing a lot of optimism. There's a few channels actually, and a few analysts that were saying we can actually see a dead cat bounce up to take out the liquidity. Now, the reason why they're saying this is if you go back to trying to pull it up right now, if we look at the liquidation heat map, you're seeing a lot. So at 70,000 to 71, you're talking over $600 million in liquidation that could take place on leverage. These are leverage trades. These are people that are doing 5, 10, 20. If we go further out, I don't know why it's asking me to log in. I was logged in. Okay, take that out. But if you look at this chart right here, what you're noticing is nothing's changed except we are above the 50. So hopefully if we could hold above the 50, then if we were to hold this 70,645, we could potentially go test the 200-day moving average, which is 84,000, which I think I said in one of the other videos before that this was a scenario that could play out, which if you look at Wyckoff, could go to half of the distribution level. So that is an area that we could go and test if we stay above the 50 and hold above it. But remember, we're still on a bear flag. So the longer that we continue to chop, and there are some analysts and people that have been talking about stagflation, which could be a play. It could be a thing that plays out with interest rates because they may not be able to lower interest rates the way everybody thinks and what Trump wants, unless you see something bad break in the economy, but the numbers haven't been catastrophic for that. Now, we're still on a bear flag, so nothing's changed on my end. If anything, I would wait for it to go back up here, maybe 77 if we get up here. Anywhere up here is where I would look to put a short, or at least start building a short. Because remember, just like ETH, what happened was we broke above the bear flag and then fell back in. And what's interesting is there's a head and shoulder formation, which it says that the measure and move can go to about 2468, which is actually the 0.618 Fibonacci level we broke through. So there's a lot of things that can happen here, but it needs to confirm. We broke above the 50 again. Let's see if we can hold the 50 as support. And I'm not saying that it can't. It's still a bear flag, but things change. And one of the things on why I'm showing you this with the Gaussian channel is because typically when we do break above, look at this one candle that changed everything. Broke above, got above the 50, Gaussian channel turned to green, came back down, held the 50 again over here, and we were gone. So some people would have traded off of this one candle, which is a Maribozu, and it's a very bullish candle. So you got to come down, come inside this candle before making its next leg up. And until that happens, again, next target for this could be 26, or it could go to half of the distribution of 3,000. And that's great. Right now, I just don't see that happening in this move until this bear flag's broken. Until we hold the 50 as support. Look at here. We broke above the 50. The moment we came back down to retest the 50, it failed. So that's telling you to be careful in this environment with dead cat bounces, because a lot of people, a lot of longs right here are going to get wrecked at 19, 20, 23. And you can see with the candles and you can see with the levels that right here and here is where you're going to see a lot of liquidity where people went long and they put their stop losses. Same with over here. So for the record, I hope the market rips up and everything goes great and we make new highs. I'm just very cautious because we've seen this one too many times. Now, if I take you to gold, is again showing that the market's going to go up. We're actually right now, we held a 200-day, but right here, this is a lot of liquidity. So I think gold is going to come back down to 4,000 or so. And we're going to break the 200-day moving average. And these blue squares that you see are order blocks. And it's funny because it goes with this candle, which is where a lot of people would have went long. They would have put their stop losses. And unless we, again, hold above the 50 and go, who knows? That's going to be something that we're going to make a new high on now. It doesn't look like we're going to. I think that we could potentially, if the market keeps going up, we could see a break above the 50, go up here for liquidity. Everybody thinking gold's going to rip higher and then make its leg down. Or this is the start of an impulse wave because we got the A, B, and C correction. Now we could get the A, and you can see something, maybe a test back down to 45.79 or all the way even down here, still fib levels. So you could see a B, C to the upside. We go A, B, and then C. And this C could actually go up higher to take out this liquidity up here because these are fair value gaps. Tell you that the market's going to go back up here at some point, and the order block up here is liquidity. So right now we might get a pullback in gold as a bit of a correction pullback, but ultimately, to me, gold looks like it's going to go higher, and that's going to depend on whether it's a week or 2 or 3, and we're going to see how everything plays out with the negotiations with Trump and Iran. So if you found this video helpful and you want more breakdowns like this, hit the bell notification icon, stay connected, leave comments below, tell me some companies or commodities that you want me to do an analysis on, and let me know what you think. Are we in at the bottom, or are we going to continue to make a leg down? As always, stay disciplined, trade with intention, and God bless you all.